So you just heard about this stock market thing. You want to buy some stocks, but hey, how do you even do that? I see all these different order types. What do they mean? Let's talk about it. First thing, before you can even do what I'm about to talk about in this video, you need to take an initial step. And that initial step is signing up for a brokerage. And with a brokerage, you want to do an online brokerage. Don't go to your community bank or something like that and then go through their brokerage because their fees are going to be crazy. So online brokerage, I'll put a link in the description below that I put together a guide on kind of how to select the proper brokerage for your situation. We'll also flash up a link on the screen here. So that'll be down in the description box below. So that's step one. First, got to get aligned with an online brokerage. After you get signed up, maybe you are already signed up, you're going to have a bunch of different choices for orders in terms of how to buy and how to sell. So that's what I want to break down in this video. So we're just going to take it one by one, and hopefully, when you get through it all, you're going to understand what all those little drop-down options mean. When you click that little arrow and you see a bunch of choices, maybe there's just boxes you select or whatever. But regardless, hopefully you've seen all of these because they are very commonplace. So just for argument's sake, we're going to talk about a stock that is currently trading at $25. So $25, current price of stock, we'll just call it ABC. Now the first type of order you may see is what we call a market order. So what does market order mean? If you select that option, that means that I just want it. And not only do I want ABC, I want it at any price. It doesn't even matter to me. I just want into the stock. I want to own shares. I want to buy it. Not in a few minutes, right now. So market is just saying I want it now. And you're going to pay whatever price the market gives you. So if this happens to fluctuate up to, let's just say $25.02, so if that price goes up to $25.02 for whatever reason, maybe like a split second before you click the buy button and it goes up to $25.02, it doesn't matter. You're getting in at $25.02. If it goes in, let's just say, or let's just, it drops to $24.97 right before you buy. It doesn't matter. You're getting in. You want it now, so it's going to give you whatever the market has the current price at. So that is what a market order is. Next type of order, a limit. And all strategies are different, but a limit is more times than not the order that you want to be using. Because market orders, especially in penny stocks or illiquid markets, can get you in quite a bit of trouble. But a limit, but also at the same time, market orders do have their place in the market. So I don't want to say like this is like a black hole or anything. I mean, they have their time and place. But a limit order is essentially saying, I want it, but. So what is the but? The but is saying, I really do want that, but I'm only willing to pay a certain price for it. So again, if the stock is trading at 25 and you're like, I do want into ABC, but I don't want in at 25. I'm only willing to pay $24.90. You would select limit order, and then when you select limit, your broker is going to ask you, okay, well, what is the but? Meaning, well, what price are you willing to pay? So in our example here, you would put in a limit order for $24.90. All that means is you're not going to get any shares of this unless the price hits $24.90. So if the price drops down and hits $24.91, you didn't get any shares. If the price goes up to $25.50, you didn't get any shares. You were only willing to pay $24.90. So you put a limit on the order. That's what a limit order is. The next type of order, very, very important type. Stop loss. Now the thing here is stop loss only pertains to you if you've gotten in. So either this or this order type has already taken place in order for a stop loss order to be relevant to you. And a stop loss is saying, I want out. Now the name's a little deceiving because it implies that maybe you're, stopping a loss. But in other situations, especially when you get more advanced trading, a stop loss can still take you out of a position, but it's not really stopping a loss. because you would already be making money. So it's not like this pertains to only losing trades. This is just a way, again, of saying, I want out of the trade. That could be a losing trade. It could already be a profitable trade, but you just want out. Now, within this family, there are two types, and hopefully these both kind of sound familiar. There is a market stop, and there is a limit stop. Market is saying, I want out now. So it is just going to get you out of the trade whenever. So let's say you get in right here at 25, and you're like, you know what? I only want to risk 10 cents. So you could put in a market at 24.90. And if the price goes down there and hits 24.90, bam, your broker is going to sell your shares and you're going to get out. But market means no matter what. So if the price really starts to go down fast, maybe by the time all the little computer algorithms do their thing, the price is at 24.85. Well, because you're doing a market, meaning you want out now, it's still going to just sell you and get you out at 24.85. Sure, you said 24.90, but because it's a market, that's not a guarantee. The only guarantee is your broker will get you out of the position. On the flip side, the limit, so we'll go with this 24.90, you want out there, but if you choose limit, you're saying, I want out, but I'm only willing to take a loss of up to 10 cents. Meaning if the price does one of these numbers where it's just moving so fast that it just essentially goes down through your order, which is possible depending on how fast things are moving. That's just the way the market works. But let's just say the price just starts to collapse. Like bad news or something comes out and the price just whoosh, the toilet flush, down it goes. Because a lot of other people are going to try at 24.90, you just may not have any shares there. You may not be able to get out. But the problem here is, well, you're only willing to sell for 24.90. So when the price hits 24.85, you're not selling. Price hits 24.50, you're not selling. Price hits 24, you're not selling because you said, well, I'm only willing to sell for 24.90. Whereas the market, sure, it can cost you a little bit more because maybe you don't quite get out when you thought you do, but at least you get out. So again, all orders have their time and place, but I'm going to just kind of circle this one. A limit stop loss can be very, very risky for this situation where if some sort of bad news comes out and if it skips over what your limit order is, who knows how low it can get, and your broker's just going to hang on to the shares because you told them, well, I only want to sell at 24.90. So, keep that order in mind. It can be, I'm not going to say to never, ever, ever use it, but I'm really struggling right now off the top of my head to think of an instance where that sort of, stop loss order may be, wise to use. So these are going to be the three main ones you use. Now there's a whole other family of orders called conditional orders, but that's more advanced. Maybe I'll come back and do another video on that sort of stuff. But these are going to be the backbone of the orders. If you ever watch any of my live trade videos, these are the orders that I'm using. So it's not like because there's advanced orders, that means you have to use them. The plain and simple orders such as you see right here are going to be more than enough. And then finally, I should say, these aren't really order types. I suppose in a sense they are, but maybe you've seen GTC. This just means good till canceled, meaning your order is going to sit out there. So if you put in a limit order here for 24.90, it's going to sit there and sit there. And next week, it's going to still be sitting there. 3 months from now, it's still going to be sitting there. Opposed to this one, I don't think there's a universal term for it, but it essentially applies, it's good till the end of the day. So we'll call it GTE, good till end of day. And this is one where hopefully that's pretty self-explanatory. If by the end of the day, the price, let's just say, goes to 25, 25.05, 25.02, 24.97, so it's just fluctuating. It never quite hit 24.90 by the end of the day. Well, then this order is going to be canceled and you don't have to worry about it. So obviously something like this is if you forget about the order, then it's okay because it'll get canceled at the end. Hopefully you're not forgetting about orders, but if you do, it's going to cancel itself. But this one here, if you forget about it, you may have a surprise if you don't come back and check your broker for, another 3 weeks and you're like, oh yeah, I forgot about that order. And it may be sitting out there, who knows, maybe it's been filled. But that's going to be what GTC stands for, good till canceled, opposed to the other type of orders where it's, just good up until the end of the day. So like I was saying, these are the, not advanced orders, very basic, but this is what I use all the time in my everyday trading. This is what probably, I was going to say 90% of people use, but I guess I don't really know if that's an accurate fact or not. But the majority of people, I just use the word majority of people do use these order types, and they're really all that you need. So limit, market, and then your stop loss orders here. You get a grasp of these and how they work. I just like to remember it, as these, market, I want it now, limit, I want it, but, and then, you combine these with the stop loss, which when you're talking about stop losses, you just want out of the trade. So hopefully you found this helpful. Obviously this is designed for more of the newer people out there. So if you are newer and this helped you out, please click the like button. If you're new to the channel, then by all means subscribe. A lot of other videos and such on the channel. I release live trade videos, chart analysis videos, all sorts of stuff. So definitely subscribe and check things out. Hopefully you found this helpful. So get out there and happy trading.